Hey everyone, John Enner here, and today in the market psychology video, we're going to be taking a look at a breakout morning on crude oil. So taking a look first of all at Friday. Friday's price movement had a big drive higher, and that big drive higher was kind of out of the blue. Not many people, I think, were really expecting that kind of movement, especially as, how explosive it was. So with that big move up, one key thing here is that they left that last swing high in the dust. And a lot of times, those little swing highs, swing lows, you'll see the market break out of them, pull back to it, and then continue up. But in this case, it just blasted through it and kept going. Now, that type of breakout momentum is very likely going to have buyers, and that's where the buyers came in on the pullback, and they ended the day very near the highs. So that is important because we need to know the context that we ended Friday with. We ended with a pretty strong bullish nature, but with a possibility of that little area acting as a magnet. Now, when we opened up, we actually opened gap down with a very strong bull candle follow-up. Now, that's going to trap a lot of buyers in because of that strong bullishness that we saw from Friday, really all Friday. So when we open that gap down, buyers are going to see that as cheap pricing, and they're going to try to buy into it. But the important thing here is to put it into context. If we have an open magnet down here that is it's almost like a gap where we broke above it, it still hasn't filled yet. Gaps very commonly fill. It's going to be tough for the buyers to get the move going, knowing that the downside objective is so close. So essentially, the buyers get trapped in. Big bull candle goes one tick above it. Just to get the buyers in, immediately slams lower onto the lows. And that is our sell signal, knowing that we have a magnet underneath for price to drop into. Now, once we start driving into the lows here, it's such a strong move that you're very likely going to have a secondary leg to the downside. You're not expecting much, but at least for them to retest the lows so you can sell for a move back down to those lows. Now, drawing that line across here and keeping an eye on that area, you'll notice it acted as a very strong area of support and resistance most of the morning. They tried breaking above it again. All they got in terms of follow-through was a doji, and it immediately turned right back around into bearishness. So we know that the bears at this point, the bulls are getting nowhere, and the bears are the only ones getting continuation. We know that buyers are still probably trapped because of all the wicks at the bottom. They're probably buying into the lows for whatever reason. But if they stuck along with it, their stops are underneath the low, and that is easy targets for the sellers to try to drive the market down into. So a beautiful sell signal, knowing that we have buyers getting stopped out underneath to get the move to continue further down. Now, they push down into a monthly support level at 40.59, where we get a bunch of support. We get stalled out for 15-20 minutes, and then we catch a big pop higher. Now, we're in a bear trend, right? So these big bull pops are not likely going to succeed. It's very unlikely that they stick. And we've seen that several times already. Nice bull spike, failure. Bull spike, failure. Bull spike, probably going to be a failure. Hey, the first time of the day, bull spike and a failure. So nothing is telling us that the buyers are in control. So as soon as we see a big bull spike into immediate failure, that is a sell signal, knowing that it has literally worked every time today to drive the market right back down. And this had a beautiful breakout move to the downside. And now you're seeing continued selling pressure once again. So the important lesson to take away from today, if you had a difficult time trading today, is stick with the trend when you see that one side is heavy. In this case, the bears opened up. They immediately trapped the bulls. Clue number one. Clue number two, bulls are getting no follow-through. Bears are the only ones that are getting follow-through and continuation. Stick with the trend. The trend is your friend, and there's a reason that saying is around. So just a beautiful example of a breakout morning here on crude oil and the market psychology behind it. So hopefully you learned something. Hopefully you found it interesting, and we'll see you next time.